There's a smart new website that will change the way you invest using social media.
LikeFolio.
Here to explain,
A team of brothers, Andy and Landon Swan.
of LikeFolio.
And they've always been building out great technology at the intersection of social and trading.
Powered by unique social data, analyzed by legendary traders. The LikeFolio broadcast starts right now.
Coming at you from the Win Zone, we are here to cure your Valentine's Day hangover. We know what's going on. You've been missing us. It's been a little while, and we're back. LikeFolio is back on the airs, on the podcast, and we're very happy to be here.
We've just been so busy.
That's right.
It's been hard to get the podcast going.
Yeah, but we are going now. It's going to be weekly. You can count on it coming out on, I think Fridays we'll publish. We've got, just to reintroduce everybody, we've got Nick Fenton is our producer-in-chief and also options expert and just all-around great guy.
Feels so good to be back in this chair.
Feels good, doesn't it?
Absolutely.
Landon is a founder of LikeFolio, and Landon Swan. He's one of the best. One of the best swans. He's one of the top two swans.
Top two swans of our generation. Yeah, absolutely.
So it's good to be back in the saddle. I am Andy Swan and also a founder of LikeFolio. And we just wanted to make sure everybody knew what we do, what LikeFolio does, just to catch everyone up because I know our audience has grown considerably. LikeFolio attempts to and does a very good job of identifying consumer spending trends and shifts in consumer behavior on Main Street before it becomes news on Wall Street. And we do that by looking at social data, which we analyze mentions of brands or mentions of brands or products owned by publicly traded companies. We analyze those for sentiment, for purchase intent, and then we map them out over time and see what's going on with the consumer. It's just a really cool company that's growing and providing a lot of people a lot of value. So we hope to do that on this podcast. So before we get into that, before we get into social data, I thought we have to talk about the recent market volatility. It's been insane. Last week, I think we saw markets essentially crash twice and rebound huge once or twice. And now we're back, I think, over 25,000 on the Dow. It's almost kind of like very little happened, but
it happened for a lot of people. Though.
A lot happened in between.
A lot of shaking out.
Big time.
And so, Nick, I know that you're kind of, you're probably more clued into volatility in the VIX because you're so into options. What was going through your mind last week when we saw that volatility spike? I can't remember what the VIX went from and to, but I remember it got at least into the 30s or 40s.
Yeah, it peaked up around 51, but that was, just a few seconds. It's kind of more, 38 was more of a level where you could have actually sold some premium consistently throughout the day. And what was going through my mind was the VIX has been as low as like 8.5, which is just crazy low, but mostly, around 10. And 10 is, also a very crazy low level, which has disengaged me from the marketplace from a trading perspective, because when the VIX is that low, this long period of time, the trading opportunities are just minimal. When we had that huge pop in the VIX, I was like, uh-oh, game on, back in the, time to get re-engaged and start selling some premium here.
Yeah, so just to catch people up, if you're not completely familiar with it, when we talk about the VIX, VIX is an index of perceived market volatility or anticipated market volatility, correct? It's using put options and the premium that people are paying for put and call options and determining some level of anticipated volatility in the market, correct?
Correct.
And is that only, you mentioned put specifically, is that more fear-based, like market may sell off, or is it volatility to the upside potentially as well? If VIX is high, could it just be people think the market's
high
crazy?
VIX just means overall fear of large-scale movements, generally to the downside, is what it's correlated with. And then low VIX is just complacency, overall market complacency.
Gotcha.
Well, you could see why the market would be complacent, because for almost however many years, it's been lockstep up and to the right every single day. 30 to 40 Dow points on average has been really nothing to do except for hold.
Yeah, very abnormal market activity.
But for traders like us, it's not great when the market just does
money
that.
managers love it.
Very boring. Oh, money managers love it.
Oh yeah, you're up again this month.
The easiest thing, it makes their job so easy. No volatility is their best friend. And then no volatility is our worst nightmare.
Right. So now it gets real.
Yes.
Volatility is back, at least for now. And it's shifting towards a stock picker's market and a trader's market, which is what we are good at because our data allows us to see what may happen with a specific company when they announce something or once analysts catch up to what we're seeing. And so, it's I'm all for it from a business perspective. I love the volatility moving up. I don't know if I wanted it at 50, where people are getting whipsawed out of every position that they have. But, from a trader's perspective, hey, kind of that 20 to 30 range on the VIX is fantastic.
Absolutely.
And you'll notice it came right after the State of the Union.
Yeah.
That's great. When I talked about it, after the last 5 or 6 Obama State of the Unions, the average market move was down 2% over the next week. And it seems like the week after the State of the Union is danger zone. It's weird.
Yeah, that is weird. I guess people have so much to digest and, sort of that new year thing is over and they're actually trying to figure out what's going to happen this year. It's just kind of time to put positions on or take them off. We'll have to watch that next year. We're going to really have to look into the week after the State of the Union because that's very interesting data. So we got the what comes with market volatility for a lot of people is kind of the realization that they had more risk than they thought.
Ooh, been there, done that.
Right, because again, complacency means you get used to market swings of. Let's use the Dow, for example. You get used to market swings of 100 points being pretty large. And then all of a sudden, you've got a day where 800 or 1,000 points happens in a matter of hours. And now all of a sudden, the positions and the leverage that you have become exponentially larger, especially in your mind.
Right, because if everything's steady up and to the right, 100 points here and there, you're going to be like, well, I'm leaving some on the table. I'm going to leverage up a little bit. That works, continues, leverage up a little bit more. Then all of a sudden, the whipsaw happens and you're like, wait a minute, how much did I just lose?
How quickly did that loss just happen?
Right. It erases weeks or months of gains very quickly. So we put on LikeFolio's blog today, which you can find at LikeFolio.com. Just go to on the top right, you can just go to the blog. 6 tips to help you thrive in volatile markets. And these were I just wrote these because these are the things I try to remind myself of, and I don't always do a great job of it. But the first and foremost one for me is a lot of times I'll get into positions and I'm looking at the profit side of the position. I'm looking at the potential profit and kind of the risk is kind of there. I mean, I know that there's some risk and
of course, human nature,
right? I'm looking at the profit. And so that can get you in trouble instead of thinking risk first, right? And if you think risk first, you can actually position yourself a lot better in terms of leverage.
Right. And I was reading this article. It's the 6 tips are really good and they're also hard to follow or they're not instinctual. Like people don't do these normally. That's why this is a good read for people to try to focus on these.
Yeah. So I think you got to think about the risk first. What could the stock go down to or up to if I'm short or whatever? And then think, what would that loss be? And, can I stomach that? If not, then take it down a notch. And yeah, your profit's not going to be as big, but at least you can handle some swings.
That's really key because it allows you to, hold through some nastiness.
Right.
If you're in a position where it's forcing you out quickly because you haven't, properly assessed for quick price moves, then you aren't going to give yourself the amount of duration needed to have a successful trade.
And I'll tell you, okay, I'm going to confess to something. Last week, I got in a vertical spread on SPY right as the market was almost at its very bottom. The VIX was huge. I sold a put spread that was under the market.
Nice.
And the timing was perfect. Everything was great. I felt really good entering it. And then I clicked and I confirmed it, and the trade had gone through. And then, dummy me, I go look at the risk profile of the trade, you know?
Always do that after
I'd executed. Right. And I was like, wait a minute, that loss side goes down a lot further than I thought if this goes the wrong way. And I had accidentally put in
like 10 contracts instead of one or something?
No, I did the right number of contracts, but I had the spread wider than I thought. I thought I was doing I was doing a $2 wide spread, and it was a $4 wide spread.
Gotcha.
Right? And so my risk went from whatever I thought it was to double that in terms of dollar amount that I could lose. And I was instantly feeling very different about the position. Instantly very different, because now my confidence was like, oh, wait a minute. Now, if this actually goes down a few points tomorrow, this could actually kind of ruin my account. Right? Or, take away all of my gain.
You went into panic mode.
I did. And I was like, okay. So I immediately just got out of half of it. And
nice.
I took a little loss on half of it.
That's discipline.
And just said, all right, I'm back to the risk profile that I originally wanted. Ended up making money. So it was all good. But and now, of course, I'm sitting there thinking, wow, I could have made double.
And that's the kind of mistake, because next time you might be like, well, I would have made double last time. I'm going to go ahead and do it this time.
Yeah. But I think if I'd have kept the double position on, I would have gotten out quicker.
Yes.
Absolutely.
And I would have messed up at the wrong time or anything. Like,
it just throws off your psyche completely, you know?
It really does.
And also, a less seasoned trader would have seen that error that you made initially, and instead of exiting half, may have just exited the entire position, scared themselves out of it.
Yeah.
You know, I mean,
like
it's amazing what you do, like the poor decisions you make when you figure something out that you did incorrectly and go into panic mode.
Yeah.
And, I mean,
I feel like there's a case for like a buddy system. Like you want to place a trade, you tell me what you want to do and I'll enter it. And I'm like, wait a minute, you sure you want a 4 wide?
Yeah.
Yeah. Oh, absolutely. I mean, and, it did. It cost me to get out of half cost me like $300 or $400. I was just like down $300 or $400 in a matter of 2 minutes. And I just took it, and I'm glad I did. Wow. But
I'm sure the spreads, like the mid-nat spread on that spread, was wide because of how crazy the VIX was at that point.
Did you take the natural on the way out, or did you fight for a fill?
No, I got good fills.
Okay,
I was a little bit stingy, but in any event, that's a different Andy than the Andy from 10 years ago. Because the Andy from 10 years ago would have been like, well, I guess I'm hoping double as hard. Right?
It's like an excuse. You're like, well, whoops.
Here we go. Let's strap in.
I'm all in.
So I want to make sure. So we're not going to go through all these. People can read them. It's better to read them. I don't know if you guys had a favorite one out of it. One of my other favorite ones was to invest with a purpose. And that is just to know very clearly why you're getting into a position. A lot of times I see, especially newer traders or new investors will, kind of see something going up or see a headline and kind of get in real quick and maybe a little bit too large. And then as soon as that, kind of viewpoint changes and now you have risk on the table, you're a lot more likely to switch into a psychologically driven decision rather than a data based or hypothesis based decision. So if you can get into something with a hypothesis that is not necessarily completely tied to the price of the stock, that can be a lot better psychologically. So if you're using LikeFolio data and you say, look, I think XYZ is looking good from a consumer spending perspective, that's not likely to change over the next 3 days, even though the stock price might. Right. And so, kind of let the data force you out.
That kind of goes into the one that I like. The fifth one, slow yourself down.
My favorite as well.
Is it?
Absolutely.
Every time I get in this trap sometimes where I'm wanting to place a trade, I'm looking at getting a good fill, and I have this fear of missing the trade when I just decided to make the trade. I could have decided an hour ago or yesterday or a week ago, but for some reason right now is when it's going to run because I'm thinking about getting into it.
It never fails.
It's so stupid to think like that. Just take a minute.
It doesn't matter how seasoned you are as a trader. I mean, you could be traded for 30 years and you still get that feeling, that emotion. And it's crazy. And I have to fight myself every time.
Right. Think about all the trades that you've gotten into where it went against you initially. So your ability to time the market is not just going to happen every time. So just wait. Try to get a good fill. Rethink whether or not you want to get into this trade. Look at what Andy's talking about. What's the long-term reason for getting into this trade? It doesn't have to be right now, entry or exit.
Yep, love it.
I think the defined risk tip is huge too in volatile markets. Utilizing defined risk strategies, even though there is a ton of opportunity in naked strategies, undefined risk strategies, it's really important to make sure that you really have a firm grasp on your overall risk. Because when these when the VIX starts popping up to these crazy levels, you never know what could really happen.
Yeah.
And it can continue to 100.
Well, yeah. Well, I mean, think about that. You said the VIX was at 8 to 10 for a long time. So then when it hit 26, that seems pretty big.
Yeah.
And it got all the way up to 50.
Exactly.
Right. So you don't know.
Especially if you're new, a lot of people don't know about the risk defined trades like verticals or just buying calls or puts. People don't know that you can do that kind of stuff and have a max loss where if everything goes against you 100% the wrong way, you only lose so much.
Yeah, I mean, the other problem with undefined risk trades versus defined risk in this type of environment is if you have an undefined risk trade on and say the VIX goes from 30 to 70, right, a little over double, that means the market has likely gone against you because you're probably selling puts. Mm-hmm. So the market's dipped down pretty significantly and volatility premium has expanded more than double. Therefore, your undefined risk position could force you out. You could get a margin call.
Right.
You don't have the duration capability
right.
of continuing to hold that defined risk spread if you had done a defined risk spread, to hold through that chaos.
Right. So the market could go against you and implied volatility could go against you. Double whammy.
Oh, big time double whammy. So if you do use undefined risk, make sure you have tons of capital cushion.
Yeah. And be far away from things too.
Yes.
I don't even like doing, I don't like selling naked options very much at all. I know a lot of times it's the smart move, but I still I just know myself too well and it's just not going to work with my psychology. And so I just don't do it. Even though it might be smarter, might be better to make money because you don't really want to buy that put underneath of it either because it's supposedly too expensive. But look,
I mean, it's more advantageous from a probability perspective.
Yeah.
But it can get pretty scary.
Yeah. Yeah.
That's number 7. Know yourself.
Yeah.
Even if you know it's better, if you know you can't do it, don't do it.
Good call.
Yeah.
All right. So this week, speaking of love is in the air, which I just think I spoke about at the beginning, but speaking of love is in the air, the Snapchat report that we put out was widely circulated on Wall Street and in the media. CNBC covered it, Yahoo Finance, Benzinga, Google, I think Mashable even referenced it. So pretty big deal. And if you haven't gotten this report, again, go to LikeFolio, go to the blog at the top right and look for, it's 2 down, I think it's Snapchat disaster report or something like that. You can get it for free, and it also subscribes you to the LikeFolio letter. So you just put in your email address, the PDF of this report, 4-pager gets sent to you immediately, and then you're on the LikeFolio letter, which is free and weekly and very cool. So get that, but we'll go through some of it right now. Basically, do you guys use Snapchat?
I do not. I have like 3 times, but
yeah, I don't regularly use it, but yes, I use it, maybe once a week.
Yeah, I'm kind of the same way. So I wasn't one of these power users that was super upset. I mean, whatever. But Snapchat rolled out a new user interface, and they warned people that was coming for quite some time. And I think the idea behind it is to give their advertisers more prominence and to allow them to greater monetize the application. Well, of course, that makes people mad.
right.
Of course.
And change in a user interface is always kind of gets roughed up by users. People normally just don't like it, period, even if it's good.
But if you're doing it to highlight advertisers, that's even more.
But in the case of Snapchat, this particular change, if you look at this data in this report, it's one of the worst received product innovations of all time, not just user interface
like
change.
Chipotle making people sick.
Yeah, I think it's actually worse.
I think it is worse
Yeah,
than
than
that.
Chipotle making people sick.
Norovirus of apps.
Because there's only a few dozen people.
Norovirus of user interfaces.
Yeah.
Yeah. A few dozen people got sick, but everybody got the update. And, ooh,
Yeah.
the red.
Yeah, the red on this chart, and what it shows is day by day a growing chorus of negativity, and the amount of people talking negatively about this is extreme. The percentage of people that are talking about Snapchat who are talking about it negatively is extreme. We have the user sentiment or happiness down to like 20%.
From 60.
Yeah, from 60 in a matter of
I mean, that's a major
in a
dip.
matter of
A
days.
week. Yeah,
right.
like a week.
And what's crazy is if you look at the number of positive mentions, it like goes up like 4x.
Yeah,
But negative is like 16x.
right.
I mean, it got people opinionated. It was very polarizing, and most by far were negative.
Yeah, it's really unbelievable. You want to get this report. And the other cool thing that we saw in the report, we looked over because there's been chatter over the last year or so, about Instagram stories kind of being what people, it's exactly knockoff of Snapchat stories. So it's the same feature. And that's one of the features that Snapchat kind of buried in this user interface. And so we thought, all right, let's look and see if there's any impact on Instagram. And so we went over and looked at Instagram stories, that specific brand in LikeFolio data. The results were, again, quite unbelievable, that the growth in people talking about using Instagram stories or downloading Instagram to use Instagram stories or switching to Instagram stories or that kind of phrasing, just straight up as you move right on the chart for those last 5 days. It's pretty incredible. I think it's 4 or 5x over the course of 4 or 5 days, and it just shows you pretty clearly that users are moving from Instagram or from Snapchat to Instagram stories, and they're talking about that pretty directly.
This is one of my favorite things about the LikeFolio data is that, we obviously you could look at Snap versus Facebook, but when you're able to drill down into not just Facebook but Instagram, and not just Instagram but Instagram stories, and compare that to Snapchat, you get a much better picture because you're not diluted by all the other Facebook data.
Yeah, I love being able to drill down like that. And I think it's super valuable information. This is the type of stuff that normally we sell for quite a bit of money to companies and professional investors, but wanted to get it in the hands of everybody that follows LikeFolio. So make sure you go to LikeFolio.com, click the blog at the top right, and then click on the Snapchat report. Or you can just look on our Twitter. It's all over our Twitter, twitter.com/LikeFolio. We've highlighted this report several times, and you can get it for free. I
would like to say one thing real quick.
Yeah.
With regard to Snapchat, although I did have to seek out how to see my friends' stories, because it's they switched around things with the update. I don't know if any of the listeners are users, but I assume there's several listeners that are users. All you have
At least 3.
Yeah. All you have to do is go. To me, it just seems more efficient because where your friends were previously listed, where you would send them messages back and forth, that's also now where you click on their actual picture to see their story instead of going to a completely separate page to see their story.
I think people didn't use the chat stuff, and they just looked at stories, so they just wanted all the stories in one place, really easy. But
I mean, this makes way more sense. It's all your friend-related stuff is integrated on one page, and then anything that's kind of advertiser or suggested user related is on a completely separate page. So what's the issue?
You like it better. You like it better.
I think
you're part of the 20%.
Is there 20%?
20% of people like it better.
Yeah,
well, according to our data.
Count me in. It seems logical.
Cool.
Well, I want to. How are we doing on time? What are we at?
25 minutes.
Okay, we want to keep everything. We're trying to keep these at 30 minutes or less. in the future, I'd like to keep them at 20 minutes so people can hit them on their drive home, but we're all right. I do want to ask you guys one question.
There's a guy in LA that's like, it needs to be 2 hours.
Right.
20 minutes. What kind of dreamland do you live in?
Yeah, you can tune in to Joe Rogan after this if you want the rest of the 3-hour commute to be filled. But all right, so I had a fun little game. All right, I want you to imagine, because it's Valentine's Day, I'm feeling romantic, that you're going to essentially marry a stock. Okay, so doesn't matter what the price is today. Everything is what it is at this moment, but on Saturday morning, you're going to walk down the aisle with this stock and commit.
I love this.
For a very long period of time. So somewhere between a Larry King marriage and, the traditional lifetime Catholic marriage, but we're talking like a 10, 15-year type of window.
Right.
What is the company that you want to be an owner of for the next 15 years, no matter what happens? You cannot sell in that time frame. Nick, you got an answer?
Yeah, I have an answer. Mine is Shopify, ticker symbol SHOP. Currently just shy of 14 billion valuation. So I wear a lot of hats, and one of my hats is CFO of a retail company, and they utilize Shopify. So I've gotten very familiar with Shopify over the past 18 months, and it's a really, really nice user interface, very intuitive. The reporting and analytics information is great from like a financial reporting perspective. The theme options and integrations are really strong. Tons of really nice third-party apps that fully integrate, with zero issues, just seamless integration. And just the overall stock price has been trending really nicely, a real nice steady uptrend. Don't really care about that when I'm looking at 15 years. More so care about the fact that they're just doing a lot of things right. And I think that they're going to continue to do a lot of things right and even better. And, just e-commerce as a whole continues to grow and grow and grow. And they're at the forefront of the turnkey solution for e-commerce business.
Interesting. It seems aggressive to me. Like it's kind of a tech play when you're going out that far. But if they've got the team to adapt and change over the next decade.
You're always taking a risk when you're marrying a hot chick, right?
Yeah.
Tech is hot.
Yeah, tech is hot. So you hope you're right.
Mine is, I've actually done this because in my IRA, I used to just put money in I don't even know what it was, but the fund, aggressive fund.
Yep.
And I got tired of that. I was like, you know what? From now on, every year, I'm going to pick one company. And so this last year was my first year doing it. And I picked a company that I'm essentially married to. I'm not trading in this account. This is it. Mm-hmm. And so to tell you the company, I'll ask you a question. Of all the companies out there, think about every company in every industry. Which company would they fear the most coming into their industry?
Amazon.
That's who I picked. I love them. They disrupt. They're so smart. They're innovative. We spend so much money with them. I might as well have a piece.
Yeah.
I just absolutely love Amazon. It's my favorite company. So that's who I'm marrying.
Yeah. I think that's probably one of the more popular answers I think that we would get. It's too bad it wasn't your answer 20 years ago.
Maybe Whole Foods would be a little sexier because, it's got the Amazon touch, but it actually might, quadruple.
Well, they're out. I mean, you can't trade that now.
Really?
Yeah, no, it's fully integrated into Amazon now.
So I get that answer too. I got both.
Hey, good job.
I married Amazon and its hot little sister, Whole Foods.
Oh, well, we're taking a turn here.
Polygamy, man.
Yeah.
I didn't realize your brother was a polygamist over here. Call the police.
Yep. So that's interesting. So Amazon and Shopify. Both tech answers, really.
Amazon's a distribution answer.
Yeah, they're definitely huge distribution, logistics, and way more than tech now at this point in the game.
Okay, I think mine would be Budweiser. So the Anheuser Group, or what's the formal name of the company?
Bud.
So ticker symbol InBev.
InBev.
I think InBev would be my pick. I think it's recession proof. I think it's proven generational type of thing. There's always going to be demand for that. And I really like the way that they have survived the craft beer movement, the bourbon movement, the spirits movement. As a beer company, those were all major threats to a established player. And it seems like they kind of just brush them all off and continue doing what they do. So well-run company. And I'm just a little more conservative, I guess, if I'm going to commit for a long time than you guys. But that would be my pick.
I like it. That's a distribution play, too. Essentially.
Oh, yeah.
They're everywhere.
Yeah, that was all of my picks. Like, I was like, okay, Walmart would be good. Coca-Cola would be good. Budweiser would be good. It's just like everybody that's got a footprint around the world already.
Right. I considered McDonald's, even though I don't ever eat there.
Yeah.
But they're just everywhere.
So what you're saying is I'm marrying a 20-year-old Swedish model, and you guys are marrying a old, maybe divorce lawyer that's been married 4 times already?
Divorce lawyer.
Way to go, guys.
And her sister.
I think I'm going to have a little more fun.
Yeah. Until she leaves you penniless.
So true.
Good stuff. Great to be back in the saddle. Hit us up on Twitter at LikeFolio. We're pretty active on there. Check out that Snapchat report. Make sure you get the LikeFolio letter coming to you this weekend. And have a great weekend.
See you in 6 months or so. Is that right?
No, we'll do it next week. I think we're back going now.
I like it.
Have a good one.